With all the wildfires taking place here in Los Angeles, on today's video, we're joined by Zachary from Schneiderman Insurance Agency to go over some of the top myths that you might be hearing about when it comes to these wildfires. Stay tuned. Zachary, always good to see you, my friend.
Nice to see you again, too.
All right, so today we're going to be talking about a lot of the myths that are out there when it comes to these wildfires here in Los Angeles, because there's a lot of reporting in the news, and I think when you go online, people have their own ideas like everything else in life. So I thought it would be a good idea to hear it from somebody who's actually in the insurance industry. So with Zachary with Schneiderman Insurance Agency. All right. So let's start with this, that I think one of the biggest myths that I hear, I think people talk about is, you have all these homes that have been damaged and destroyed, and people are saying, well, it's going to take forever for them to be able to clean up the debris, that's left as a result of the damage. Is that really true? I mean, aren't there people out there already cleaning and scrubbing some of these foundations?
Yeah, I mean, there's contractors out there that are advertising. I know a few that are able to go. And one contractor I know has about 10 different groups of employees that they send out to different sites, and they do a site clearance, and they get rid of the contaminants, make sure that's clean, ready to be rebuilt on, and that's there. These guys are out there. Once your carrier's gotten you to the point where the adjuster says, yeah, it's a total loss, time to start doing these things, just check with your adjuster, make sure they're ready for that to happen, and there's nothing else they need to do or salvage. And then, yeah, it's about finding the right contractor to either clear the site, to make sure the foundation's still going to be usable, and finding people who are going to help you rebuild and get back to normal, because at some point the process to go through all the permits and plans and get your home going, it's probably a little bit of a race to make sure you're in line for those things.
Right. It's so funny you say that, because when I think of all of our clients over the years that have had water or even fire damage, I just know how long it's taken for them to even get to the point where they can start to rebuild and apply for permits. And now you're doing this on a level that's never really been seen, especially here in Southern California. I'm just curious, like, what does that really look like as far as timeline for an insurance company? If you're the insured, to what it's going to be look like, okay, your home has been destroyed or damaged, and now you want to actually start the rebuilding process. There's so many moving parts.
Yeah, I mean, we are dealing with a very unique situation. I've tried to explain and set expectations with clients that this isn't going to be what you're used to. This isn't going to be the same expectations you would have on a standard claim. If your house catches on fire because you have a grease fire, a kitchen fire, or a pipe burst, and you're a one-off home, city permits, adjusters, everybody's available pretty readily and easily. At this point, insurance companies are pretty much bringing resources in to help with this, just like you saw when Katrina hit New Orleans. People have to move out here and be relocated to be able to handle this much work at once and for the duration that it's going to take. So we have to rethink that, and I think we all have to have an appreciation and an understanding that no claim is convenient. If you lost your home to a fire, if it's partially damaged, if you have smoke damage, if your car was damaged, nothing is going to go as fast as it normally would, and nothing is going to feel convenient. So when you feel like this isn't going as I wanted, this is so inconvenient, a claim is inconvenient in the first place. That's trust that you got the right insurance company. They're going to take care of the problem, but understand that we are in the middle of something that's pretty historic and our city hasn't seen. And the resources even from the city level, I mean, do they have enough people in the Department of Building and Safety to handle the mass amount of permits that are going to be coming in there? And when we get into stuff like, how is the Coastal Commission going to handle the Pacific Palisades? And are they going to let people rebuild on the coastline? Are there specific requirements? Are there environmental issues? We don't know.
I was going to say, I don't even think they know.
I don't think they do either fully.
So I think the problem, like I've been saying this in a lot of our videos lately, is that if they don't know, how are we going to know? And I think by the time they figure it out, there's going to be a delay. Because, like you were saying, like if it was a normal one-off claim, whether it be fire or water damage, okay, you know what? We know what the path is going to be moving forward, even if it's slow. But here, even if you were lucky enough to get all your ducks in a row and have an architect and have somebody ready to build it, you know, I don't even know what the city's going to be ready for anything. I just don't. I think they're underprepared. I think there's going to be so many things that are going to change on so many different levels. And like you were talking about the Coastal Commission, I'd be willing to bet the ranch I don't own right now that there's no way they're going to let people build on the ocean side of PCH.
It's a speculation that I've been having in my own head, and I don't disagree with you. I do think that you're going to have enough parties that fight that being able to rebuild there might be a problem. And if that is the case, what happens not only with the people that own, you know, okay, so you lost your house there, so you can't rebuild it. What's your land worth now?
Right.
And you have debt on it. So there's a lot of questions. Obviously, not as an insurance agent, I can't sort of apply my expertise there, but having done real estate development and been involved in construction and these kind of projects before, it does cause a question where we have to say what is going to go on and how does that get handled. And I think the sooner we have those answers, the better, from asking the city to help give us some clarification. And if we can get some exceptions or allow people to rebuild what was once there, not to continue to build new things, but to allow people who had something there to go back and be grandfathered in, would be something I think we could all beg the city to work with us and ask those kind of places like the Coastal Commission to allow.
See, I think most of the places are going to be okay when it comes, like they will figure out a solution. But I think certain parts of Pacific Palisades, whether they be on a hillside and there's moving soil, right, or again going to those homes on the water, you know, you're looking at massive soil erosion the last, you know, 2-3 decades, and you know they're not going to allow homes to be built on stilts anymore, right? So I think that's going to be a hard one, I think, for people. I think people are going to be that have those type of homes that either have foundation issues or hillside, or again that are right there on the water. I think it's going to be really problematic. And like what you said is, I think that's really valid, because now you're just basically going to have land value, and as we've learned when it comes to property taxes, that they're willing to, whatever your assessed value is for the structure, they're willing to make that go to zero, but the land value, they're not really going to be reducing. So if they don't reduce the land value, you know, for a lot of these places, especially in the Palisades and Malibu, that's where your value is. Your value is literally in the land.
Yeah. And what happens when you have debt on the property, and yet you can't rebuild the building, and yet you have no land value? So your insurance company isn't insuring the land value, they're insuring the ability to rebuild something. That's great, they'll pay to rebuild a house, maybe not on that site, but what do you do with land that becomes valueless if that's the case?
Right.
And I have to hope that doesn't become the case, but I'm trying to look at things from a more realistic perspective, and that's something I'm concerned about.
Right. What have you been hearing? Because when I'm putting my ears to the ground and talking to whether people that we know that have unfortunately lost their home, or are friends of people who lost their home, I had an idea in my head when this tragic event started about how many people were underinsured. But the more and more I talk to people, the amount of people that are underinsured, it's way more than I thought.
So, you know, there's concerns that insurance companies and insurance agents, as well as insureds, they all use software and tools to help us determine what it would take to rebuild a home. And in the best of all scenarios, people probably had the right amount of insurance to rebuild the home. There's extended replacement coverages, but what happens is eventually those extended replacement coverages are only so much, say 25 or 50%. And what happens when we have a condition like this that is a once in a lifetime issue, and now maybe it takes 2 times what it would have taken to rebuild? You don't have enough coverage in those instances.
Right.
So when those things come up, that's where you see some of these class action lawsuits or mass tort claims that do factor that in and try and help people recover that, because your insurance company is only liable for what it is insuring. There's limits of the coverage. And it doesn't mean that someone's insurance agent or the insurance company didn't do the right job. A circumstance happened way outside of the norm. And
I mean, how would you even know to think of? I mean, yes, even if you're in a fire zone, who would even know to think of something like that?
It's definitely an issue. And granted, you want to start to think about what would it take to rebuild your home. I tell clients all the time, like, if you want to know what it would take to rebuild your home and you want to talk to an expert, call your contractor. Ask a contractor, hey, what does it cost per square foot to rebuild a house like mine in this location? What would you charge? That contractor's going to be who you'd hire to do that. They probably are going to know better. But let's also understand that when circumstances like this happen and we have mass catastrophes, and then the resources, like how many contractors are available? Are people paying for temporary living to live out here so that they can help rebuild a community that needs more contractors, needs more labor? We're going to tap into those labor pools pretty heavily right now. And it may take more than what we insured their homes for, or what someone else had coverage and the extended replacement that was designed to factor this in.
Right, because if, let's just say more or less, before this happened, not just Malibu and the Palisades, but I'd say LA County as a whole was about $400 a square foot to build. So if you're about $400 a square foot, I just don't see, like, there's no way you're building for that cost, because like the cost of materials, steel, lumber, concrete, I mean just everything, plus the amount of contractors, it's, you know, it's going to be a dime a dozen. And even if you bring in people from out of the area, I don't think it's one thing to have a licensed contractor to do a massive remodel. It's another thing to be rebuilding a house from scratch. Like, not every contractor is going to be qualified, even if they can do it and they're licensed to do it. But, you know, it would be like going to the doctor, right? And, you know, you'd want to look at the qualifications of your doctor or specialist before they do anything on. Like, you want it. And so I think those people are going to be in such high demand, and whatever you are going to be getting from your insurance company is going to fall short.
Yeah, ground up construction is a specialty. You have a lot of folks who know how to remodel a kitchen, renovate a home's interior, but when you have to restore a home or rebuild it from scratch, fire restoration or new home construction is a different specialty, and you're not just hiring just anybody to do that. And there are other parties needed to do that. You have to get into engineers. So you're not just doing cosmetics.
Right, you got architects, engineers, and again, going back, you're going to have to get these plans approved, but the city that these fires took place in, they're not ready yet. The county's not ready yet to be able to handle that yet, and so it just keeps going back and forth. So okay, so let's talk about a few things here, because I get a lot of people, asking me, "Hey Scott, is the California Fair Plan going to run out of money?" And so first, briefly describe what the California Fair Plan is. And I know a lot of our clients over the years that have actually bought properties in fire zones, or their insurance carrier dropped them. Now they're using the California Fair Plan. So talk a little bit about that really quickly, and then some of the misconceptions about the California Fair Plan.
Sure. So the California Fair Plan is an assigned risk pool. Fair plans are insurance policy types, and you have them in other states as well. So there's fair plans in Texas, or I think about 38 states have a version of a fair plan. It's designed so that the admitted market of the state help participate in it to create a market where they would not write their own and use their own paper for it. So hey, we have homes that, for all, they're in decent condition, they should be insurable, but they're in a location that nobody wants to insure. So a market has been created by order of the Department of Insurance to create that market. And that is shared among a group of insurance companies in the state, and they share in the profit and the losses. So in the event that there's not enough money in the fair plan, they would be able to send an assessment back. So one, the fair plan has X amount of dollars of reserves, okay? After the reserves, they have reinsurance, for what I understand. So then reinsurance is like insurance for an insurance company. Okay. Over a certain amount of losses from a single event like this, they get to tap into the reinsurance, and the reinsurance company pays for up to their limits. Then you have, in this instance, the ability to go back and assess the shareholders or the parties involved in the finances of the FAIR plan. So you go back and now you have your various insurance companies that have to participate in that loss and put up money. Now, a recent law or a recent change to that is that the insurance companies are now able to pass through a portion of that to policyholders. So not just the policyholders impacted, but let's just imagine that you and I maybe own homes in the Los Angeles or in the state. Imagine that you could get a bill from your insurance company for the assessment that they have to pick up, and it's somewhere buried in your contract or in the state laws that allow those companies to pass that through when the FAIR plan issues an assessment like that. And I think the last time an assessment like this happened was somewhere after the 1994 earthquake.
All right, so that kind of leads me to my next question. Is the million-dollar question is, even for those who are not affected, their policies weren't dropped, I think there's a lot of angst for people living here in California, might be the right word, that they are worried on how much they can expect their policies to go up. And I've heard any experts say anywhere from 20 to 60% and everything in between. But that nobody really knows yet, do they?
Yeah. I'm not... to tell you what's going to happen, we don't know yet. So, I've talked to certain insurance companies and they've advised us that, before these fires, we had heard that like certain companies I work said, hey, we're already where our rates need to be for the next year. We don't expect any major rate increases other than what's already approved and in the system. So if we quoted a new home today, they expected these rates to be fairly stable, okay? With this, everything could change. We don't know yet. And the data from this is just we're not far enough out on this.
Right.
What I do have concerns about is you have carriers that have stayed in the market in California, and some have already made the changes that they needed to make sure they're willing to stay. Others haven't made changes at all, and we don't know when the long-term fallout from those are going to be. And what about the carriers that have already left California and have said, hey, we'll come back when it's a better time for us to come back and be profitable, or the regulations make more sense, or the environment is better. And here, what happens when a company may have planned to come back sometime in 2025 or early 2026, and maybe this has changed their thought process? They now can't non-renew policies that they had planned to non-renew due to new moratoriums or orders by the Department of Insurance. So now maybe their way of shielding themselves from high-risk areas, they're now going to stay with that concentration that they were planning on getting rid of. And now maybe they don't want to come back and participate until they can do that. So what delays has this caused to normalizing the California market is, I think, the big question.
Right, and then going back to what we were talking about earlier, is that when a lot of the insurance companies announced that they were dropping policyholders in the affected areas before the fire even took place, but a lot of people think that they actually canceled those policies on the spot, but they didn't. They actually had some time before they're actually going to be dropped.
Yeah, so there's news that I've seen about certain carriers, like, certain carrier canceled 75,000 policies, a month or two before the Palisades fire. And my understanding is that insurance companies are announcing their intent to cancel policies when they do that. And yeah, they might be saying we're going to cancel 75,000 policies. But when they make that announcement isn't like, okay, so you get a letter and you no longer have insurance. Typically, they're not able to do that to a group of policyholders except for upon renewal. So they can say, hey, this home no longer qualifies for our underwriting guidelines or our underwriting standards, and we need to non-renew it. And so you're going to get an advance notice about your potential renewal that hasn't come out yet, saying, hey, we're not going to offer you a renewal this year. And you've got time. So I highly doubt that we saw that many people get an exact non-renewal when that announcement was made, and more so that carrier was announcing that they were shifting their risk and wanted to have less of a concentration in an area. But it would probably be over a year cycle that you would see those non-renewals fully take place.
Right, and which is why you hear the governor here in our state also and others announce that for those that have been canceled, the carriers actually have to wait an additional year too. They can't actually drop them.
Yeah, so my understanding is that if you're in an affected area.
Correct.
So the question is, what is an affected area? And typically there's zip codes that are specifically impacted by these fires, and then there's neighboring zip codes where they might worry about smoke damage or other things. That doesn't mean every home that was going to be non-renewed is now no longer getting non-renewed in the state. So you want to make sure we understand that there are still probably going to be non-renewals as far as I understand the way that order came about. But if you're in the Palisades or a neighboring zip code, odds are you're protected through that order. Now, there could be other things that may cause a home to be non-renewed, separate from we're no longer insuring you due to wildfire. And the question is whether those reasons are still valid. And that's something someone would have to really do their own investigation on.
You know, it's interesting that everyone's been focusing on how much their policy rates might increase as a result of this event. But one thing I don't hear a lot of people talk about is not just homeowners insurance, so maybe you're even a renter, right? What is that going to do to your auto insurance rates?
This isn't a collision claim, so these fall under comprehensive. Typically, if you lost the auto due to the fire. And so comprehensive rates, we don't have the same kind of losses that you do in other states where we have hail events where they get tons of damage from hail and need the cars repaired, or other weather floods. So it's very rare that we see an event this impactful to the auto insurance market that I don't know if that's going to make a massive change there, but it is something we need to pay attention to. But I think the liability claims are a bigger concern in auto insurance these days.
You know, Zachary, one of the things that I always tell our buyers when they're buying a home and when it comes time to looking at insurance, that because, you know, a lot of times they look, okay, well, who offers me the cheapest insurance, right? And one of the things I tell them, I said, you know, you have to compare like to like, and you really need to have certain things in place. And the number one thing that I tell them is that you have to have at least 2 years loss of use, right? At minimum. Because whether it be an earthquake, a fire, you know, if it was just a one-off, you know, you're probably looking 6 to 8 months to be able to start rebuilding, right? So you're going to need to be able to find a place. But I think people overlook that loss of use right now, and I think that's going to create some problems for a lot of people.
The loss of use is a key factor for a major loss, and part of the problem here is that a lot of the carriers that offered 24 months loss of use withdrew that product or reduced the offerings due to the insurance crisis in California. So products that did offer 24 months are very, very hard to find right now. And you might find those with some of the high value home carriers that do, you know, the multi-million-dollar mansions, but those carriers have really slowed down what they're even writing in the state. But the average, you know, homeowner that has a tract home, a lot of the policies that are available to them right now, many are 12 months. And while we expect those policies that offer 24 months to come back in the future, it's very difficult to find. And you know, something we didn't talk about when we talk about loss of use, the Fair Plan runs a very different product where their coverage is for fair rental value, not loss of use. So when you lose the access to your home, instead of where like fair rental value only pays for, what would it take to rent your home on a monthly basis, but on a 12 monthly? So not like an Airbnb, hey, we get a lot more money. That's not really the comps. They're looking at saying, hey, if you sign a 12-month lease, what would the monthly rate be on this house? And we'll pay you based on that monthly figure. That's very different from, I can't live in my home. We can't eat at our house and make our own food, so you have receipts for the cost of eating out or extra costs of commuting or other expenses that are additional living expenses. The fair rental value does not include additional living expenses. And so when you do file that claim, and because you're impacted by fire or smoke damage, and the Fair Plan is the policy that picks up the coverage for those perils, we have to remember what that policy allows for. You can't, these are very different products, and when you have the Fair Plan and a wraparound or a difference in conditions policy, remember that they're governed by what the cause of loss is. So it's not like you get to pick and choose which policy covers this loss. It's already dictated. There's a reason why these two policies have to be written together, and they fill each other's gaps.
You know, speaking of the California Fair Plan, what's the coverage limit amount? Like, what's the highest? So if you have a $10 million house in the Palisades in Malibu, what's the limit that a policyholder would be able to receive from the California Fair Plan?
So commercial is different. So I'm going to put commercial to the side, but a primary residence or a home or a unit is $3 million total. But that $3 million is for every coverage line item that you're going to have. So imagine we got to insure the structure, separate structures. And I know people say, well, I don't have any separate structures. Well, you have walls and fences that go around the property. Maybe you have hardscaping, a driveway, other things that could need to be rebuilt. Then we get into the contents of your home, the fair rental value of your home that you want coverage for because you can't live in the home. There's other coverages, and remember, if we're doing a replacement cost policy, you also have to have 10% for ordinance and law coverage by state order. So now, if you have a $3 million reconstruction, you now need 2.7 because you got to have about $300,000 for the ordinance or law coverage.
Right.
And so the coverage can get depleted pretty easily. We really hope, it used to be 1.5, so you used to only get 1.5 million. They recently raised it to 3, but even that's not enough to do so many homes. When you think about just a tract home in Porter Ranch, really probably costs 1.3, 1.4 to rebuild these days, depending on which area it's in and what the home is. But then you start to add all the contents and the other coverages, and it really gets depleted quickly, and you end up with not enough coverage. So you have to sort of pick which coverages you want. Now, there are some carriers out there that will write a surplus fire policy. So sort of like how you have an umbrella policy that gives you more liability, there are excess fire policies for those kind of homes, but they usually start at about $10,000 a year just to get into that policy.
Wow. So let's go through this scenario, because another part of me believes that it could easily be 60 to 70% of the people don't even rebuild. And I think part of that, I think if you're elderly, and there's a lot of elderly population in both fires, the Eaton and the Palisades fires, I just don't think they're going to want to stick around for that. And so they're just going to cash out in every which way possible. But then you have a lot of families, right? So especially if you moved into these areas because you decided, you wanted to be close to a certain school. Now that school is completely burned down, right? And you have no idea how long it's going to take. It would take 5 to 10 years. And by the time it's rebuilt, your kid is no longer going to be able to go to elementary school. They'll be ready for middle school. Yeah. And then also, a lot of these people I think are not going to want to be part of going through the rebuild where it's not just a one-off, where literally it would be like the example I've been using from the get-go. It's like new construction, phase 1, you're the first house that's built, and now you have 2 to 4 more years where you have a situation where you're dealing with the construction vehicles, the noise, the debris, the jackhammers, all of that. And if you have a family, you don't want to be living next to that, and there's no infrastructure around you. So I could easily see where it could be a situation where it's 60 to 70%. And a lot of people I'm talking to, they are really worried about rebuilding, not necessarily because of the insurance, just of everything that it's going to entail. Yeah. And so I wonder, with everybody who's going to be in that boat, what it's going to be like for them insurance-wise, because I could just see they're going to be cashing out, taking the insurance money and trying to go somewhere else.
So, it depends what they're looking to do, right? There's going to be people who have to rebuild. They don't have a choice. They need to rebuild that home for financial reasons. There's others who are going to say, hey, look, I don't want to stay. It could take 3 years to rebuild the infrastructure, rebuild the home, and I don't need my kids moving again.
Right.
I'd rather start rebuilding my life somewhere now. And so maybe they buy a new home if they can financially do this, and then rebuild a home that's no longer going to be owner-occupied or be rented. We get into a lot of other things. And I was talking to a mortgage broker that I'm friends with, and I'm curious because some people might take the money and say, okay, well, I'm not going to rebuild this home. They're going to pay off the mortgage on this, but that was at a low interest rate you can't get today. And now are they going to be able to buy another home, finance that, and afford the same quality of home or the same size of a home on a higher interest rate? That changes a lot. But the other things that I was looking at, and I haven't heard a lot of conversation because we're still dealing with the fires. So right now, fire's not out. I think we're still in, let's get this under control before we get into how are we going to now rebuild and how do we regroup? So right now, we're still in emergency mode, right? Eventually, we're in recovery phase. But when you get into recovery phase, and like I said, I hadn't heard enough about this, what happens when all of these new ordinances or laws or elements that you can now take a single-family home lot zoned for one home in the past, and now you can rebuild splitting the lot between generations, or putting multiple units on there for density, that they now want more density. But how do you take a home in the Palisades where they used to be surrounded by beautiful, large lots, single homes on there, and now maybe your neighbor wants to put multi-units on there and can, because of the laws that allow them to. I forget, it was like SB 9 or something like that. So how does that impact the value of the high value home that's supposed to be rebuilt and the one next door that's now no longer going to do that? And how are these neighborhoods going to rebuild and come together?
It's a valid question, because I don't think anybody knows, and I don't even think they've even been able to figure out. And like normally in the past, you would have to have a town hall meeting, and there would be a lot of fighting and complaining against that. But
with SB 9, doesn't that just take that off the table?
You're right. And so it's going to be really interesting to see how the communities are rebuilt. All right, one last question. You and I were talking about this a week ago, and I hadn't really thought about this, because I've had a lot of our clients in the past, whether it be water damage or whether it be fire damage to a house, that they've obtained the services of a public adjuster, right, to help them to navigate, and so dealing with the insurance company. But if your payout or what you were owed by the insurance company is going to be $1.5 million, right? And that may not even be enough for building costs. What's going to happen if you hire a public adjuster?
So public adjusters typically work on a percentage of what they obtain from the carrier. So if you have a policy, if you have a total loss, and let's just say your carrier is going to pay you out the policy limits, they're going to get a percentage on that policy limit if they're doing the work for you. So you got to just make sure, if you're going to hire a public adjuster, talk to a lawyer, make sure this makes sense, read the contract, understand that when you sign the contract, I believe there's a 72-hour cooling off period. So if you wait longer than 72 hours and you decide you don't want to work with this public adjuster or think it was a bad idea, the contract might not let you pull out of that contract. And so you got to think about it. There is definitely a place for public adjusters in insurance claims. They exist for a reason. I've had clients who have very specialty homes, a craftsman that's in a historic district that needs to be rebuilt a certain way and has all sorts of details, and it's a partial loss and you got to restore it to that way. And you don't want to just put in drywall when it was plaster, and they know those details. And sometimes there's a value to what they can get that you wouldn't have gotten on your own. But really, if your adjuster from the company is doing a good job for you and doing what they should be doing in the first place, do you need someone to take an extra fee? Now, there are people who are going to say, hey, look, I don't want to do the work. I don't want to be dealing with my insurance company. This is a long process. I'm a business person who's needed to be at work, or I'm a parent who needs to take care of my kids, and paying that fee is of value to me so I don't have to do it myself. That could be a valid reason, but you do need to factor in, are you giving up something that you may need financially and can do another way? And it's just something to make a conscious decision of rather than an unconscious decision of. Don't let emotions get the best of you and sign a contract because someone knows how to play those emotions, and just make sure it's the right situation.
All right, Zachary, if somebody has questions, whether it be about these wildfires or just insurance in general, how can they get a hold of you?
Sure. So all they have to do is call our office. The phone number is 818-322-4744. Or they can email us. My email is Zachary@SchneidermanInsurance.com. And they can always visit our website, SchneidermanInsurance.com. There's plenty of information. We have a blog that's talking about what's going on, might give some extra information. And we've got a great team here. So it's not just me. We've got a whole support system, and even if it's just a question about a claim that's going on with another carrier or a situation that you need an opinion on, we want to help the community right now more than anything.
Cool. Excellent. All right, guys. Hey, if you have any questions about insurance, give Zachary a call. He is the guru of insurance. And if you have any real estate questions about how you think the wildfires might impact you, definitely reach out to us. My phone number, 818-396-3311, 818-396-3311. You can always send us a direct message as well, or comment down below. Hope you enjoyed this video. Just wanted to give some insights. I know there's a lot of misinformation out there, but hope this video kind of helps you wrap your head around everything that's taking place right now. And as a community, we need to find ways to be resourceful and help each other during these turbulent times. So again, thanks for watching this video, and we'll see you on the next one.